Hello everyone, welcome to the continuation episode, part 2 of BTO or resale. My name is Nizam Adli. I think it took me a little bit longer to actually upload this part 2. Apologies for those who've been waiting for this episode. Moving forward, I think important that we just summarize what we have discussed in part 1. We talk about the grants, talk about the grants between buying a BTO and a resale flat, transaction prices in Punggol, where BTO and resale are concerned, the difference in terms of price over the years for resale properties in Punggol. I think that was a bit of our focus. I think my intention, objective is not to do a typical video of what's the difference between BTO and resale in terms of you can move in earlier, you don't have to, the wait is shorter, you can choose the location and all that. I think that is something you can Google easily. But more importantly, where the statistics are concerned, you need to be aware of what you're getting yourself into, not to scare you or what, but importantly, every decision, especially for the first timers, right, the decision that we make for our first home is very important because it sets the tone for the subsequent properties that we want to buy, be it another BTO, be it a resale flat or private property for that matter. So very important in every aspect of life, if I may say so. The first step is really crucial, right? So having said that, this is the just to give you a heads up. The topic we're talking about for this episode is: will your property be an asset or liability, BTO or resale? So these are things that we have discussed a bit in the episode part 1. So I will be continuing from where I left off so that you have an idea of the flow of how we actually look at it from a statistics point of view. Very important. So continuation from episode from part 1. So now, sorry, a bit too fast. Right. So impact of BTO flats on resale prices. So very important. These are things that maybe as a first-time owners or first-time buyers, it doesn't really concern you. But moving forward, as you reach MOP, it is very important to understand how the pricing structure when it comes to BTO flats that have MOP for five years. So when your BTO flat reach MOP, it become a resale flat. So, and then if you choose not to sell in the 5th year, what will happen in the subsequent years? When you finally decide to sell your BTO flat. Okay. Now let us look at these figures. Okay, if I may say so. Newly HDB prices versus resale, right? We look at a September 2019 BTO exercise in Punggol. I think Punggol is one of the newest town, so it's a good gauge, a good example for us to showcase because they are very new flats and slightly older flats. So it's a good gauge for us to do a comparison. Now, for example, Punggol is a non-mature town. So basically, the pricing, let's take a 4-room flat in Punggol. 4-room flat in Punggol, the resale transacted price a 4-room flat in Punggol hovers between 440 to 480K. This is an average, okay? Now, selling price for a BTO, right, is 287, right? And including grants, you are able to achieve a 227 pricing when it comes to BTO. So it's really something that very affordable for those starting out. In comparison to Tampines, which is a mature estate, right? So because Tampines is a regional center, so it is considered a mature estate where prices are, of course, slight premium, slightly higher because of the maturity of the estate. Now, looking at the 4-room flat in Tampines, the new BTOs, hovers around 312 to 267. Not much of a difference, but there is a slight premium. But the resale transacted prices of 4-room flat in Tampines hovers around 400 to 465. So not much of a difference, maybe in between. But on an average, it will be slightly lower because of age. All right, because in Tampines, only recently, government pumping a lot of BTOs. Previously, in the last 5 years, probably not much compared to today. So that's how you can see the difference in terms of the pricing. Now, very important also, if you're gonna go for a BTO, you look at because you need to plan. Very important, because whether it's a BTO or a resale, you still have to meet the MOP, minimum occupational period of 5 years. So you need to stay 5 years before you can do anything, meaning whether you can sell or rent out your HDB for that matter. So now, looking at this bar chart, why at one point of time HDB prices were on the rise quite steeply is because of the fact of low supply when it comes to the newer flats. So the BTOs, so the resale flat becomes more in demand, right? More in demand. So when resale flats become more in demand, supply, supply is not there. When it comes to newer HDB flats, that's where the resale prices starts to jump. Okay, so this is how I look at it from a 10 years perspective lah, from 09 to 20 years actually. No, about 12 years. Yeah, sorry about that. Now, so having said that, in the last 5-7 years, HDB has actually pumped in a lot of BTO flats, meaning they start to build BTO flats, although demand is not there yet. They understand the fact they need to make the price affordable when it comes to resale. What the government did was a lot of the land they converted into BTO flats. They built first before they know that the demand will come in, but they ramp up the building of BTOs to ensure to give a balance in terms of pricing, meaning so that buyers, let's say first-time buyers, would have option of buying a BTO, more options rather compared to previously. So if they it mitigates the high demand for resale flat. End of the day, when demand become lesser for resale flat, what would happen? Price will start to adjust accordingly. Of course, there are other factors. Now, so in the next, from last year to 2020 to 2022, you can see an average of 30,000 units gonna MOP. So imagine if every one of them is selling the 30 over 1,000 units on the market. But of course, if we just take a ballpark figure of 10-20%, it's also a substantial amount. So basically, when supply are more, demand doesn't match to supply, what will happen? Price will be suppressed. So these are very fundamental things that you are able to figure out when it comes to buying a resale or BTO, right? So moving forward, so what is the impact? Okay, the most how do I say, the most impactful, or the most the most important policy that affects HDB price is mortgage servicing ratio. What does it mean, mortgage servicing ratio? To be very clear, I think important that I show you the next slide, easier for you to understand. Okay. Now, for example, what is the impact of MSR on HDB flat? Here, a bit very colorful, but I hope you can understand. You can have that's why I just highlight the median 500,000 loan, for example. Now, 500,000 loan, to get a 500,000 loan, what is the income required, right? So, if, for example, 500,000 monthly installment for 10 years at 2.6% is 4,735. Income required to get this loan is 15,000. Maximum loan is 3360, right? Income required is 11,200. So here we are looking at the different tenure of loan, meaning the number of years that you want to loan, right? So today's context, right, HDB maximum tenure or maximum loan tenure that you can take using HDB loan is only 25 years, no longer 30 years like previously, right? So having said that, right, if you want to loan a $500,000 HDB loan, how much is the income that you need in order to secure a 500,000 loan? The answer is 7,567. So this is very, very crucial in terms of the amount of loan that you can get depending on your income. Okay, because there's a restriction of 30% MSR. So only 30% of your income is calculated to give you the amount of loan that you are eligible to get. You know, so this is one of the restriction, right? So imagine at 7,005, right? Your maximum loan of 25 years at 2.6%, your monthly mortgage is $2,270, right? So this is the maximum that you can actually use to service the monthly mortgage. It's on the high side, you can see. So a lot of us, I mean, what I'm trying to say here is no matter if your income is high, basically your loan is restricted when it comes to buying a HDB. Only 30% is assessed to buy a HDB flat or EC for that matter. In comparison to private property will have a component of TDSR, total debt servicing ratio, which is 60%. So technically, if I may say so, the amount of loan you are eligible based on your income and age to buy a HDB is half of that if you are buying a private property. So that is how the policy has actually dampened the quick rise of HDB prices because of the fact that if you cannot loan, there's a lot more cash and CPF that needs to be used. So people tend to be more what do you call that? Less appetite to buy something beyond the loan, meaning there are a lot more cash that they need to come up with, especially for a HDB flat. So what will happen to prices? Prices start to maintain, start to stagnant, you know, depending on location, of course lah. Of course, there are locations that are in demand as well. So this is just an example why, or really is something that how this MSR component has actually slowed down the increase of HDB prices in the past 5, 6, 7 years when it was introduced in 2013. So really, these are things that how the government is ensuring that HDB remains affordable. That's the keyword, affordable, right? So, like what I was saying earlier. So imagine, you are buying a private property in comparison to a HDB. You see, maybe I toggle a bit. See, to buy HDB using HDB loan for a price of 500,000, your income, combined income or whatever is must be 7,567. Okay, but to buy a 500,000 private property, I mean, which is quite rare nowadays, you only require an income of $4,175. So you see the difference, almost double. Okay, almost double. So the same amount of income, you see here, 500,000, your income has to be 7,005 in order for you to get this 500,000 loan from HDB using HDB loan, right? Or to buy HDB flat for that matter. But with 7,005, when it comes to private property, you can actually loan up to 900,000. So you imagine same same income, the loan is different when it comes to private property, right? Versus HDB. So this income of 7,000, if you were to buy HDB, you are whether it's HDB loan or bank loan, right? You're only eligible for 500,000 of loan. In comparison to a private property, the same amount of income, you are able to loan almost double. And that's what I'm trying to say here. That's the component of the difference between MSR and TDSR. All right. Now, see, this is a summary. Okay, summary of why HDB prices, like I say, remains affordable no matter how high your salary is. There is a component of MSR where there's in terms of loan, it is restricted. So this table gives you a summary. What can a buyer afford if they are making such an income? So like I mentioned earlier, 7,500 with MSR, meaning buying HDB, you are eligible for a loan up to 500,000. Okay. So estimated property price that you can buy is 625,000. Okay. But with the same income, if you were to buy a private property, your loan amount eligibility is up to 900,000. So the amount of the purchase price of the property that you can buy goes up to about 1.2 million based on the 75% loan to value. So very, very important for you to understand these fundamentals, right? Now, moving forward, okay, just now I mentioned about increase in HDB price suppressed by policies and all that. But, if a lot of people were to hold their property or their HDB flat with the notion that, every year there will be a increase of 10%, example, based on this table. So assuming you bought a 5-room flat at 500,000 in 2020 this year, so if your assumption is every year there's a 10% increase in the price of the property that you're holding, which is the HDB, in 5 years' time, in probably 5 to 6 years' time, based on a projection of 10% a year, your property should be valued at 885,000. But having explained about MSR earlier, right? Is it possible for that 5-room flat you bought today at 500,000 to increase by almost 50% in the next 5 6 years with the MSR in place? Is it possible? It is something for you to think about, because the answer is quite obvious, but I let you decide on whether it is possible or not, right? Now, why this is a summary of why HDB prices cannot go up as much, okay? Right? Because of the fact that 75% of owners stay in HDB. It has to be affordable. More than three quarter of the population, or rather 75% owners stay in HDB, meaning in terms of the number of people staying in HDB is much, much higher, of course, than those in private property. So as a public housing, it needs to remain affordable, especially to the young, because of the fact that our standard of living has increased over the years, all right? And we are now considered a first world country. Now, so the government introduced this mortgage servicing ratio, very important, because this just to ensure that HDB owners can service their loans comfortably, especially with the CPF that they have. The increase in salary has to be in tandem with the increase in price of HDB so that it remains affordable. The keyword here is affordable, right? Entry price is already high. The government still feels that resale prices of HDB is still very high at this point of time. It is subjective. A lot of people will argue, maybe it's still not as high as they want to, because of the fact that they have put in a lot of CPF and probably cash into the house. So they want, of course, the capital appreciation or the increase in price to be much better than what they have seen over the years. Now, of course, we have a lot of aging flats. Aging flats means the balance lease of those flats are what in today's context we call it decaying lease, meaning the number of years left of the 99 years leasehold is getting lesser and lesser. And of course, now if you drive around Singapore, especially in the non-mature estate, you see that every single land available are probably there's a BTO being built, right? Wow. So economic conditions, I think important. It affects people's affordability, especially in today's context where the pandemic is wreaking havoc, meaning some people are losing their jobs or they really need to reskill, upskill in order for them to stay relevant, and kind of stuff. So it's really important for HDB to remain affordable so that these people will still have a roof over their head for their family. Now, mindset shift of new buyers because of the fact that you know the new generations have different expectations from the older generations. Typically location in terms of finishing, because in terms of size, if you notice, I mean, I'm sure you have noticed older HDB flats are bigger in size relative to the newer BTOs. And of course, the number of floor or the level in the newer BTOs are much higher depending on location. In central location, it could be as high as 40, 50 stories. So, these are things that, and the design of the BTOs are also now quite hip. It's not a typical HDB from afar, because some are really look like a condominium now. So, by end of the day, HDB needs to remain affordable to ensure that the younger generation, the first-time buyers, are able to afford a HDB. This is important because I think these are the generation that's gonna be bit more. The millennials or the Z generations are different. So HDB also have to keep up with the trends and all that, because the expectation of these buyers are different from our parents, our grandparents, and all that, right? So, before I move on, I think important aspect of public housing is always the discussion on CPF usage. From experience, right, I think for the last 3-4 years, because of the fact that the new policies have taken effect, it affects a lot of HDB owners if they have not utilized or use of CPF is not very prudent. What I mean by prudent is the fact that CPF has accrued interest. Meaning, what is accrued interest? A lot of people would ask. Let me try to explain it in a layman term. If you have accrued interest, basically is, for example, if you don't use your CPF and it sits in your OA, and it attracts accrued interest. So your CPF in your OA grows. It's like a savings lah. Am I right? If you put in the bank, there's interest. Similarly, if your CPF money is in your OA, it attracts interest, and over time it grows. But Singapore is very unique. So you are able to use your CPF money to buy, to finance the property that you are buying, whether it's private or HDB. But most of us use it to finance our HDB. So at the same time, of course, there's the HDB loan interest. So this money is taken out of the OA to pay for the house. So, but let's say, for example, when the day you sell your HDB flat, the CPF monies you have used has to be refunded back to your OA, including the interest that it has generated for the X number of years. So normally, a lot people misconcept that, uh, especially if they fully paid the flat with CPF, that they always tell me, Nizam, my house is fully paid, I have no worries and all that. But when I show them the numbers, when I ask them to log into their my HDB page or their CPF for that matter, they get the shock of their life. So what I'm going to show you, right, is probably some of you might have known but don't understand, or brush it aside, or maybe know but don't know what to do about it. Now, let me share this screen with you. This is a statement that you can actually go log in into CPF website using SingPass, and under my public housing withdrawal statement. So you are able to see how much you have used and how much accrued interest it has attracted over the number of years that you have been paying. So for this case study, a buyer uses majority CPF to purchase their flat, means likely 100% CPF from the down payment to the monthly payment, right? So 5-room flat, they bought in 2009 at the purchase price of 412. As of this year, they still have an outstanding loan of 256,000. The amount CPF both husband and wife have used is 129,000 and 157. So to break even, they must sell the flat at 544,000. Okay, meaning in order to get back the CPF that they have put into the house plus interest for both husband and wife, and of course, firstly to clear the outstanding loan, they have to sell their flat at 544,000, which is a 5-room premium flat. Of course, depending on location, if this location commands a good price, there's an increment, there's a good steady increase in terms of the HDB price, then they would probably break even or maybe see some profit. But what if the location that they have bought that did not see any increase in terms of value of the HDB over the number of years? So what will happen? So they will lose CPF, meaning, right, that's where we call negative sale. Not only that they don't have profit when they sell the flat, they will lose some CPF in because of the fact that the price of the flat did not move up as much or stood stagnant, but because you pay with full CPF, there is accrued interest that is attracted when you use CPF. So upon the sale of your flat, you need to return this amount plus interest that it would have potentially generated over a number of years. But if it's a negative sale, there's a component of loss in your CPF, meaning that you will not get back the full amount as what been shown on your statement. It will be less the amount of CPF loss. Okay, so in essence, if you are in a negative, you sell your flat and it's a negative sale, no profit for sure. At the same time, you will not get back the full amount that you have used for the house plus interest. So in essence, the amount of CPF you can utilize for your next purchase is lesser. All right. Okay. If you use full CPF to finance your HDB. How about this example? Okay. Case study of paying majority using cash, right? So this example, right, the buyer uses more cash than CPF. So they bought a unit at 460,000. So the amount CPF they use is 160,000, and it has attracted 31,000 of interest. So to break even, they must sell the flat at 192,000. And they bought the flat at 460. So this is what we call a positive sale, meaning after less the amount of, for example, they sell at the same price, 460. They need to return to CPF 192,000 because they have used it for the down payment probably if you base on this table, this example. So the rest would come out as cash. Okay, this is a very simple example. Of course, every case is unique. So don't take this as a gospel, because every case, through my experience, every single case that I handle is different from the previous one, or likely different from the future ones, because the numbers are totally different. You must understand from that point of view. Now, in summary, like what I mentioned over the past 20-30 minutes about CPF for that matter, right? You need to know when using CPF to pay your HDB flats, these few points. Very simple. First, CPF charges 2.5% interest on the amount you withdraw from your OA for the HDB flats, which means what it means is basically you use your OA, you withdraw to pay for your flat HDB. It attracts 2.5% interest upon refunding it back when you sell the house, right? So it's important to understand. So there's a component of interest. You use 100,000, there's a component of 2.5% compounding over X number of years until you sell the flat. Even after your loan is fully paid, this is something very a lot of people mistook. They felt that they understand that, oh, once I fully pay my house with CPF, I'm happy because house is fully paid, I don't need to worry. But do you know that the interest still runs and continuously being compounded until point 3, you sell your flat? Then the CPF refunds will be refunded. Only then your interest will stop. So very, very important. I've seen for myself, right? I've handled many cases. The most recent one was my client have fully paid the HDB flat for the past 15 years. So, but because of the fact that he didn't know that his accrued interest is compounded over X number of years until the day we sell his flat, his interest alone was 197,000. So that's a lot of money. But because market value cannot hold that amount, or the valuation of his flat was only 500,000. He needs to break even at 640,000. So there's 140,000 loss. Imagine he lost 140,000 of CPF just like that, because of the fact that we thought that once we fully pay the house with CPF, we are, our retirement fund, whatever, our CPF is secured. No, my friends, you really need to understand your numbers. That's why we look at it from a statistic perspective. So you understand how to structure, how to manage your payment processes or payment strategy when it comes to CPF and cash. So very important. Okay, now let's see. Okay, let's see what is right. So in summary, like I said, it is not about BTO or resale per se when it comes to aesthetic, the location, the facing, near your parents, or the wait. You have to wait for another 3-4 years before you get your BTO. Or if you buy resale, you can choose your unit. You can see the view. You can smell that. You can know your neighbors and all that, etc., etc. No, my objective in these 2 episodes, part 1 and part 2, basically is to give you a perspective from a different point, meaning from the numbers, from the statistic, and how you can actually, ensure that your CPS is working hard for you. Especially those by BTO. Typically, BTO at the at the point of 5 years MOP, when you sell, most likely there will be profit. Yeah, how much it depends on. It's not going to be as much as your friends who sold 5 years ago, where because times are different. Some people will tell me, Nizam, my friend 2, 3, 4 years ago sell his BTO, earn about 150, 200,000. I mean, from experience, those days are over. So you need to manage your expectation, especially if your location is not as ideal. So very important. Even to choose your BTO, there must be some strategy to it. Not just based on price and something that you feel that you can just take it lah, because the amount that you can afford is such. So but you need to look at location as well. You need to look at from a 5 years perspective. uh, a lot of people buy sale of balance flats. Sale of balance flat is, of course, the convenience of not for you need no need for you to wait for 3, 4, 5 years to get your keys. But the fact is, the the downside of buying a sale of balance flat is you are buying the BTO at its highest price lah, compared to your neighbors who have bought it at the launch of the BTO 3, 4 years ago. So if you look at the numbers, your neighbors can sell lower than you and still make profit, but you have to sell much higher than what you bought in order for you to have a bit of profit. So how does it work? It's difficult, especially if majority of the people in your block bought the BTO at launch, and you are the privileged one, so called, that you bought at as a sale of balance flat. But if you do your sums, you are buying it at the highest in terms of price. So these are things you need to understand. And also my previous episode have mentioned about grants and all that. So how you can take advantage of grant. But at the same time, right, I always advocate my clients, right, especially the young ones, to use your monthly payment of your mortgage to your house as a savings plan by using cash. Why? Why cash is king? Yeah, cash is king in that is very, very correct. Because why? When you use cash to pay your house, even if it's 50% cash, 50% CPF, at least that 50% cash you put into the house down pays the house. At the same time, it becomes a savings plan, because the amount of money that you put into the house, cash, you cannot utilize until you sell the house. Minimally, if you buy BTO, 5 years. Similarly, buy resale also 5 years. So before you can sell. So important, you must look at it from a savings plan perspective, because if you put in cash, most likely you get back the cash when you sell. Or minimally, it will mitigate any negative losses, any losses in the future, because price of HDB, in my opinion, will not uh, it will not run in terms of a steep curve. It will be gradual or even stagnant. So you need to be prepared. You need to understand this fundamental in order for you to, ensure that your CPF are working hard for you. Negative means, right, your CPF is not working hard for you. It is losing the interest it's supposed to earn. So isn't that something that you don't want? So I think that's why I said these two episodes are a bit heavy, a bit more technical, but I hope it gives a bit of clarity. If you need more clarity, you need more understanding of this CPF component on the payment of your property, of course, do look me up at Facebook, or comment at this video. Find me, just Google my name. You'll be able to find my contact number. Just PM me, and I'm more than happy to share further, because, like I said, every case is different. So there's no one solution fits all, especially when it comes to CPF. So I hope you have gained a bit of knowledge from my sharing. And at the same time, if you think it's beneficial, please like and share to your friends and family, so that they also are able to benefit from what we have just discussed. And probably they also are in a dilemma which we don't know, so that we as real estate agents are able to enlighten, so that they know, so that you and whoever it is know what are your options moving forward, and what is the best course of action based on data, statistics, and uh, uh, available options out there. So thank you very much for watching this video. Like I say, do subscribe if you have not subscribed to my channel. Do like the post and share it with your friends and family. With that, Nizam Adli out. Thank you. Bye bye.